JB here. Hope everyone's doing outstanding Friday, July 25th, 3:27 p.m. on this fine afternoon. Talk really quick about the markets. Some of the names I'm looking at go from there. S&P up another about 0.5% here today. It's like the slowest five-session green uh green market I've seen in some time. I wouldn't call it quiet, right? There's been some hiccups that pull on when was it Tuesday? Yeah, it seems so long ago. Last week's pull with Powell, but outside of that, it's like the news events that do come out have been around trade deals, right? We had today was rumors more of the EU and US. You have Japan. So for now, I mean, now we get into a big week next week, and there's a lot of data too. There's like JOLTS report, GDP numbers, obviously earnings. We have Microsoft, Meta, Apple, Amazon, and then of course the cherry on top of the apple pie, right? Or cherry on the ice cream, whatever analogy you want to use. We have the Fed meeting, right? And Fed statement. It's almost like Fed Chair Powell when you watch his little videos and clips from yesterday and stuff. I mean, he doesn't look like a person that's going to cut rates, right? So certainly going to be interesting. But outside of that, there'll be some fun earnings. I keep looking for some trades here this for into next week and a week after. I just don't want to be too aggressive. We are at all-time highs, but I mean new highs beget new highs, right? So I thought 636 on the SPY. We broke through 636 finally on some volume at about right after the noon hour, and then we're just slowly melting higher. So I'll take it. But I keep saying it. Hopefully I keep saying it till October or September. But one of these days there's going to be a 1-2% futures drop. We're going to wake up in the morning. There'll be a 1% plus drop day for no reason, right? And then, of course, there will be reason. People say, "Oh, it's the tariffs. Oh, it's inflation. Oh, it's the yields rising. It's U.S. dollar weakness, cryptocurrencies, gold, whatever you want to call it, silver." There'll be some rationalization for the move, but it'll be like kind of after fact, kind of like Goldman Spectacular, right? So Goldman Sachs came out today with a report, cautious the market, but they were the same people in April kept raising their odds of a recession all the way up to like 45% in April. I was talking about this morning, like CNN, they had articles. So I go back and I look at some of the articles, because I think did my rant yesterday morning, this morning, and a lot of the end of the rant was about how the market is tough to. It's easy now, right? Hindsight's always 2020, right? Captain Obvious, right? It's easy, to say things after the fact because in the midst of things, when you have positions on, there's a lot of stress. Do you sell? Do you hold? Are you going to miss out? Are you going to have FOMO? Is it going to expire? And then it's amplified in options because it's time. Time is one of those things you don't have with options. Every second that goes by is a chance for premium to come out of the call. So or puts. So it makes it tough. So that's why to me it's like important to like learn about like some of the headlines that and then think of the emotions you experienced during those days in April. And I gotta look back. Maybe I'll try and do a little post on some of the, but it's like living through those, and now here we are 5 months later, whatever, 4 months later, 3 months. And that, would you have thought in those moments in April that we'd be at 637 on the SPY on a Friday afternoon in the middle of the summer? It's pretty remarkable stuff. But anyway, take a look. Upper Bollinger Band on the SPY I think it's 636.49. So I wouldn't be surprised if we pull under that before the close. We got 30 minutes, maybe not. Also note small caps, right? And it almost looked like the small caps were going to outperform today, and they haven't, right? And they after the open dipped, started to reverse back into green, thankfully, but one of these days. And then last, take a look at the performance, right? So relative to the S&P, it's like one of the small caps going to start to outperform. And maybe it's going to take yields to drop. And maybe yields start dropping next week ahead of the Fed meeting. All right, so now just quick on some individual names. MDB, sorry, I'm not trying to curse, whatever. I had the 225 lotto calls last week. The stock is up like 12 days in a row. I have to go look. Maybe it's 11 days in a row. Maybe it's less than that. And I kept talking about it, reverting to its post earnings highs of 230, the gap from back in at the start of June, and then sure enough, here it is, right? And if I just went out and rolled out or waited got a couple weeks out as opposed to trying to do the weeklies, my calls would be up a couple thousand%. Instead, had to, I wouldn't say chase today, but I was watching yesterday and simply with Google. Obviously, if you don't know MDB now, cloud, Snow, they're cloud plays, right? So when Google reports, people start looking at different elements of their business. Of course, the CapEx spend. So you saw the energy and semis go yesterday. And then the cloud side of it. Same with Amazon. Amazon can do the same thing with MDB. So I was watching yesterday. I'm like, oh, I'm kicking myself for not getting calls for a sympathy move on Google earnings. Similar to how I was looking at Reddit. And then sure enough, it ran, but then it sold off a little bit. And so I was like, okay, I didn't miss it. And then it was doing the same thing today. I'm like, wow, this is, it's over the 200-day moving average, great opportunity. Maybe it gets up to 250. I was actually looking at the 250 calls. They were like 18 cents or 20. Instead, I went closer just in case it failed to find some buyers. I can still have some premium to close out. And then sure enough, takes off, close some out for close to 100% to cover costs, close some more out for close to 200%. And I left a few runners, and then boom, it made the decision, made the premium erosion easier because it just dove. It's 248.25 at about 12:30, and then it's 240 by 12:47. So it's one of those where you can't fault yourself because the market made the decision for you. So unfortunately, the last two of those will, well, whatever you have, if you followed, last couple just expire. That's comes with the trade when you're doing option expiration, but still profits. So that's MDB. I don't know if I'll trade it. They won't report earnings till September. But here it is, and again, it had great earnings last report, and I'm surprised it wasn't like a run and gun, 230 and then off to the races. So maybe it does go to 250, 260. So I'll keep it on radar. And then DXCM finally got the calls. I'm looking for decent risk reward strikes. They report Wednesday after the close. I was looking at 104s. Do I go out to August 15s? But I'm like, to me, the probability is I'm going to look to get a position inexpensive, ride premium, and close summer all out before Wednesday after the close. If I'm going to do that, the weeklies make the best sense because I'll still have 3 days next week. And to me, it looks like it's probably going to have some continuation. It's right at the highs of the day right now. So my calls they might be up 30%. I even look, are they still 40? They were just, excuse me, folks, 40 by 45. So they're going up. And you start looking at the chart, and I'm not saying this is a similar setup. Almost is going to have a similar move to TTD that I had 2 weeks ago, well, a week and a half ago. But it has a similar chart setup, and I was doing it on the rant a couple weeks, maybe a week ago. Barron's had a great piece on DXCM, and how they kind of lost an opportunity, tried to get with the diabetes, the step type 2 diabetes, and they dropped the ball and lost the focus on type 1, which is the one that they can really is beneficial for them, right? I mean, at some point you would think if with GLP-1 drugs, health, awareness, type 2 diabetes is probably going to, I wouldn't say it's going to go away, but it's not going to exist the way it does now. So with that, I mean, maybe there's not as big an opportunity, but either way, it looks like, I mean, to me, the stock's got the reset button was hit, and I think there's an opportunity now. So I'm not saying I'm going to load the boat on calls next week. I'm probably just going to hold what I have, lock some in to cover costs, and they're inexpensive enough that depending where the stock is, I might hold them all if the premiums don't go up too much. But that's DXCM. And to me, if there's a beat and raise, it's over $100. And so if that happens Wednesday afternoon to Thursday, the calls, the 105 is going to be a couple 100%. So that's the thought process there. Right? It's DXCM. Here's the TTD chart. And I was actually looking this morning to get some calls, and it was in the red. So I passed and reversed into the green here. They don't report until August 7th, I think. Not next Thursday, the Thursday after. I think that's it. Still looking at this one. I mean, you look, 91.38 is the 200-day moving average. So that's another one, similar to DXCM. So, monster trade not last Monday to Monday before to Tuesday. At some point, I'll revisit this one. I just don't want to be holding too much into the week because you never know. Number one, you never know. Number two, you might get a better opportunity, right? So that's that. Same with Roku, right? Roku's report earnings Thursday after the close. Flat as a pancake here today, almost pretty much identical to yesterday's action. So it doesn't make sense to chase this one. Hopefully, I get an opportunity on Monday because, again, similar with DXCM, the difference between DXCM and Roku is I actually believe Roku is a $110, $120, $130 stock. One of these earnings, it'll finally realize that. It's just, I just want to make sure I'm in when it happens, right? So don't be surprised if I had some strikes Monday. VKTX up at $35 here. Big spike in the afternoon. I don't see any like crazy call action per se. I mean, the call volume versus the put volume is 2-to-1. So you have that there. And the biggest option contracts were traded like August 1st. And it almost looks like people are front loading for next week, betting or not betting, taking a risk saying, hey, they might announce their venture GLP-1 oral data, phase 2 data next week, right? And if you do, and if it's great data and the premiums are very low, not pricing in that event per se, I mean, it could be some serious multi-bag. So I think that's some of it. And you can see some of the premiums on next week's calls are pretty pricey. Like you look, I was just looking before, they weren't this pricey this morning. Actually, only up 30-40%. Well, all things relative, I shouldn't say only 30-40%, but that's options and the stock's up 4%. So just going to hold my August strikes. Again, what I'll do is I'll just wait till August expiry. If the data doesn't come out the Wednesday or Thursday, I'll probably look to get some more inexpensive, well, if they're still inexpensive, some strikes to play further out. But the annoying thing is they can announce the data on December 31st and still be within that window of second half, which is frustrating. I do not know, the CEO doesn't have to update that timeline, right? But you would think if you have a responsibility as CEO to your shareholders, to your investors, and to your customers, right? So if your shareholders want, if you can give them better line of sight of data, then you should do it, right? So unless you think there's some outside force that's not going to allow you to release this data, you should update that to quarter 3. So rants for other days. But again, I was saying on the rant the other day too, he's very conservative CEO. That's how he is, unfortunately. And I don't get it. In the bio world, it's like you have to. I'm not saying you have to drag people along on your story, but if you have shareholders, people have to be very patient for the payouts on some of these bio names. So you almost need a cheerleader of a CEO, but a cheerleader with integrity, right? Who's not just saying things just to keep stocks elevated, right? All right, so that's VKTX. Nothing to update here on JOBY either. Hit all-time high. Well, actually, 1855 is the all-time high at 1854 right before the noon hour. Just going to continue to hold the October strikes. I was, they're still up 300%. I was looking for some other strikes. I'm like, it doesn't make sense into the weekend. Still kind of chopping around here. I mean, does it break into the 20s? I thought once it broke all-time highs, 20 was going to come. So I'm sure I'll have another opportunity. So I'll wait till next week. And then just like a little funny story, not even a funny story, but one of my top 5 stocks for 2025 is BMI. And some of it was the infrastructure play, right? So the Biden administration passed that big $1 trillion, whatever it was, $2.1 trillion infrastructure bill. And then you started to see the fruits of that coming in some of these names last year. And there was somewhat of a continuation of some of these names, but then there was a big sell-off. New administration started hacking. You had Doge come in, all that, and then the Liberation Day. And here's a name: BMI is like the water side of business, right? People, water meters. It's not a water supply issue, right? It's that people, you have water coming into the house. You need a meter. You need maintenance of it. You need monitoring. You need all those systems. So that was kind of a play on it. And then sure enough, the other side of the business was that I was looking at one infrastructure play. And last year I had Sterling Investments, I think it's called. That was an infrastructure play. It was like $70. I think it's $300 now. That was up over 100% 2024. But here's another one is Fix, right? Fix. And I'm like kicking myself because, if there's a lesson that you learn as you get older is that, trade school and things like that, sometimes people shun on them. Like they don't have a good stigma attached to them. You go to school and people are like, oh, he's going to the shop class to learn how to weld, and it's like those jobs are in demand. And then because of it, it's like folks didn't get into that. So it creates even less supply for that demand. And then it becomes a lucrative position. And here's Fix, right? HVAC. I mean, everybody has, especially in the summer, it's obviously exacerbates some of that. No, I mean, people say climate change and things makes it hotter, makes weather changes more abrupt. So it's colder and it's hotter, right? And then here's a name, and it's like I'm kicking myself, but I wasn't kicking myself at the start of the year because by April it was under $200. But then, it runs all the way up to 550. I'm doing the earnings things on over the weekend. I'm like, oh, Fix, that one looks great. It's chopping around, and then I miss it. But then you go look at the calls, and they're like $16. I'm like, there's no way I would have got these calls anyway. Only monthly strikes, liquidities week. Let's see. I was looking this morning. I mean, you still made money on the August strikes, but I mean, you would have to get to 610 calls. They're $88, and 610 calls are $81. And they were, I'd have to go look up, $46. So I think they were like $20, right? And I'm like, that's not my jive. That's not how I trade the options. I'm looking for inexpensive risk reward, right? Not expensive, not buying one contract and, you get the big move, which is great, the 25% move or whatever. But anyway, all right, rants for other days, folks. I'm trying to think of some other things I had on the top of my head, but I think that's it. Take a look at GM today, right? I mean, here's a name almost back to its earnings levels. So if that's any sign, if there's going to be a trend this earnings season, it's like how are these companies reacting to tariffs? MarketWatch just posted an article showing the tariff price increases from tariffs from retailers. I don't know where that survey came from, if it's accurate. I don't know. I'll have to take a look at that. But it'll be interesting this week to hear more about the tariff. Well, next week about tariffs, how the companies are handling, are they eating the price, passing on to consumers, what's the plan going forward. And also there's rumblings, right? The data. Oh my gosh, the CPI data, PPI data came out. The big Doge cuts cut all these folks in the Bureau of Labor Statistics. So now all the CPI data the sample size is smaller than it used to be because there's not enough folks. They fired people, whatever. I don't know if that's all accurate. If there's less Staff, again, something else I have to look at, but to me, that's not high in my list of priorities. But a lot of people like to construe that they don't trust the data now because the sample size is small. But I'm like, wow, it could be worse, right? I mean, inflation could be even cooler than expected, right? It doesn't have to mean because there's less folks doing samples of the pricing in the country that the CPI data is hotter than expected. But depends on your goggles, right? So if you have the bear goggles on, of course, that's your argument. But if you have the bull goggles on, you see it a different way. Anyway, let's have a great weekend, folks. I'll be back rock and roll.